Hello, I'm joined today by Holly Mead. She's the Deputy Money Editor of The Times and The Sunday Times and the host of a most excellent podcast called Feel Better About Money, which is available from wherever you get your podcasts. Now, we're going to have a quick chat today about investments and Holly's attitude and her investment experience. And Holly, I just wanted to kick off with a question about how you approach encouraging your readers on the Times and the Sunday Times, how you go about encouraging them to invest in the stock market, because there's still a lot of fear out there.
Yeah, there is a lot of fear. I think from our perspective, there's a couple of things we can do at the Times and Sunday Times, and that is to keep writing about investing, because a lot of people just don't know where to go to get that information. And I think that's a massive hurdle. A lot of people think investing is not for me. It's for rich people. It's for people that studied economics at university. So my key priority whenever we do anything about investing is to keep the jargon out, keep it really simple and accessible and practical. So when it comes to them writing a weekly column about investing, I'm trying to pick things that are topical and of interest. So lately that will be the S word, which I think might be swearing at the investment trust industry, the Saba debacle. But then after explaining it, making it relevant to our readers and how it affects them and how they can take that forward into their thinking about their portfolio, even if perhaps they're not invested in those trusts directly.
A slightly more investment trust orientated question. What is it about investment trust specifically that you like or you think is beneficial?
So I've been writing about investing longer than I care to remember now, but I'd say a key thing that really introduced me to the world of investment trusts was my first few editors in my first couple of jobs were big investment trust fans and super knowledgeable. So Andy Pitts, who people may remember from Money Observer, Faith Glasgow, who took over from him, they were enthusiasts, and that definitely rubbed off on me. And then I just think generally there's a lot to like about the structure of an investment trust once you've got your head around it. I think people get put off by the discount and the premium and the fact that there's a NAV and a share price to consider and gearing and all those extra layers that can add a complication, but also, as we know, the other layers that can add transparency, like having a board and having a manager that's really held to account, which I think sometimes with an open-ended fund that's perhaps a bit more driven by the marketing machine doesn't happen. So I think for me, it's the transparency and the being able to buy and sell instantly and knowing what price I'm getting, I really like.
But finally, Holly, can I ask you a difficult question, and that is, what investment trusts do you hold and why?
So I am a young-ish investor. I'm in my 30s, so I know logically I should be ramping up the risk, even though sometimes it's not comfortable. So I really make an effort to do that in my portfolio. I had a real clear out a couple of years ago. I sold everything and decided to start again. So a big whack of my portfolio is actually just in a global tracker fund. But then I use investment trusts to target some niche areas or more specific areas that I feel quite strongly about, but I think is difficult to capture in a tracker and where I want the manager's expertise. And I also do that through investment trusts. And something I should have mentioned before is because I think they tend to be slightly lower fee than an open-ended fund in a lot of instances, not always. So one trust that has done particularly well for me over the past year or so is the Ashoka India Equity Trust. I really like that it just does exactly what it says on the tin, and the management have some real expertise in that field. And I think last year, for example, all the talk was about the Magnificent Seven and the S&P, and my India Trust outswept all of them. I think it's a really fast growing economy, a really interesting demographic, and actually, I only wish I'd invested in it earlier. I remember first hearing about this trust at a conference about 10 years ago and thinking, oh, that's really interesting and it's done really well. I've probably missed the boat and then not investing and then watching for years while it continued to do well. So I finally bit the bullet and invested in that. And more recently, very recently, in fact, I've added a Japan trust to my portfolio. Because I think Japan's been really overlooked for a while by investors. I think we hear the same story about Japan trotted out year after year, stagflation and a slow growing economy and an aging population. But actually, once you separate a country's economy from its stock market, you realize there's an awful lot of opportunities. And that is another area where I think having a manager, and for me, seeking out a manager who is on the ground in Japan rather than doing it from the US or a UK office, I'm hoping that will yield some good returns for me.
That's great. Thanks very much, Holly.